Good morning, traders. Thanks for joining me today. It is Friday. It is not only Friday, but it's payroll Friday. It is 8:02 a.m. Chicago time on the 6th of January, 2023. Derivatives suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2007. Here's what we've got in terms of the copy. Man. If yeah, thing, mic cutting out. Okay, all right. How about now? Hopefully this is better. This new PC is just gonna get shit canned. To be honest with you, it's just gonna go back. Um, anyway, you should be able to hear me now. There's a delay. So it is Unemployment Friday. This morning we had uh, this morning we had non-farm payrolls came in at 223,000 versus 200,000. And then the unemployment rate dropped to 3.5%. Now this is quite negative for the market because this, gives room to the Fed to continue to raise rates or hold rates higher and gives impetus to the Fed to force unemployment. It just gives room to the market to fall. And that's the original reaction. The number was better, popped higher, and then it just pulled back, which is the reaction I expected. I was looking to the short side, and now it popped back up again. There's quite a bit of commentary um, coming across about this now, and I'm sure POTUS is going to come out and talk about this, but this is where we are now. Lower than expected EU inflation data, Samsung profits tumble, Tesla cuts prices in China. Tesla, I think this morning is down 7% or so, and then Bed Bath & Beyond's filing for bankruptcy. Still no House Speaker after I think 10 votes. Pretty outstanding. Just a clown show over there. And that's what we've got. Today we have ISM non-manufacturing PMI at 10, factory orders at the same time, ECB's Lane, Fed's Cook, Fed's Bostic, Fed's Barkin, and then Fed's Bostic again. Everybody's got a calendar and you can look that up. And so looking at the S&P briefly here on this sheet, we're in a multi-distribution profile, pretty active price discovery, and 57.25 points of range. So this is basically has traded sideways until the number, and now it's on the upper end of the range. So you could see that mild risk on sentiment across the board. The NASDAQ, Dow, and the S&P are up around 1%. The Russell's leading at 128 basis points this morning. So that's what we have. Looking at the markets, let's take a brief look at the big picture here. Overall, the markets are trading right up here. Okay, so we are above yesterday's range. Let me change the color. We're above yesterday's range, and we are inside of Wednesday's range. We are still trading within this balance zone here. We're still holding on to this 3860 area, which is very, very mature at this point. You know, you would think we would very solidly move out of here. The market just for the first week of the year is really completely sideways. It's been consolidating since late December, since about the third week of December, and we've been just completely sideways here. Complete lack of interest. We appear to be pushing higher, but look, I'm going to sound like a broken record here. I'm going to say the same thing I've been saying all week. This is not a breakout market just yet. We need to see an open drive that is sustained on the open, and a directional move with very, very poor counter rotations, be that up or down. So overall, yes, we've broken the one-time framing down we had for a day, but this is really choppy. You look at these highs, they're just basically very choppy, and you look at the lows, and it's the same thing. It's just nothing is really consistent here. And so what is consistent is that we are imbalanced. So today, more than likely, we will see a move on the open, a kind of a reshuffling of value on the open, but most likely this thing is to go dead. Most likely to go dead after the first hour and a half. This is what I'm expecting. If it doesn't, that would be a wonderful surprise. But so far, not seeing very much. So when we look at the TPO detail, guess what? What do you think I'm going to do here to this profile from yesterday? It is inside of the composite. So what I'm going to do is go ahead and merge this. And all we're doing is making this thing fatter and fatter and sharper and sharper. And so now, yesterday we finished below. Today we're above, and we are likely to just do this. Again, that being said, we do have a very, very sharp, very strong consolidation going on, and uh, balance is likely to lead to imbalance here, and we're waiting for that imbalance to happen. Um, and given the trend here, if you look at the one-time framing, the trend, the imbalance is expected to resolve downwards, is what I'm expecting. But I day trade. I don't invest here, so I'm happy for it to go and break this weak high up here and start running the other way. That 39.20 area, as we've talked about before, is pretty important up here. So to me, I don't really care which way it goes, but between 39.20 and 37.50, this is basically your range for the last 3 weeks or so, and we haven't done much else. So just keep an eye, keep an eye out for imbalance when it happens. Now let's step back for a minute and look at the NQ. The NQ, same exact picture, except the NQ is a little relatively weaker. And you can see the NQ is really taking out yesterday's high by just a tiny little bit, despite the spike up on the non-farm payrolls release. The NQ is expected to retest. This to me is we're opening in balance. I think you know what I'm going to say here. We're opening in balance, and the bigger balance, we're opening in a bigger composite. We are above the prior range. So what does the plan say? What is our setup here for the NQ or for the ES or for the Dow or for that matter for the Russell? What is the setup here? This should be really kind of sinking in at this point if you've been listening for a while. What do we expect to happen on the open? So I'll leave you with that question for you to answer. Here's the NQ composite, the equivalent composite, pretty ugly, but starting to take shape here as opposed to a 6-prong or 5-prong composite. It's becoming more kind of packed in here, and we're building the lower end of this range. To me, this still looks weak. There it is. And we're currently trading at 1904 10,944, we still have that 11,050. Remember the range 11,050 all the way down to 10,890. Oof, I can't write this morning. Oh my God, that's horrible. 10,890. So the range has been this, and we are right in there on the low end of the range. Same thing. If we look at the profile on the NQ, same issue. We are still in balance. We're trading in balance, but we're opening out of balance from yesterday. So the most immediate auction is yesterday, and we're opening out of balance of that. So I wish this was more interactive, or there isn't a 7 to 10 second delay here because I can't just sit here for 10 seconds silent. But you should be able to tell me what the expectations are for today, and I hope you can because it means you're picking this up. Here's what it looks like on the volume profile. So we've had this spike, a nice impulse up on the non-farm payrolls, a beautiful return to the full session VWAP, right? And then we push right back up to where? 3860. There's that stock zone, the 3860 micro composite point of control, volume point of control. And then we pull right back. This was a really nice setup here. As soon as the market comes right back to a higher low against VWAP and then shoots through. And look at what it's done since. It has pulled back to the 60 again, right in here, and it's holding steady here at 38.71. Looks bullish, but what we have to do today, and this is yesterday, remember, blue is RTH, orange is Globex, and so we are opening above the prior range inside of Wednesday's profile. So guess what? We're going to open, we're going to look for, is there driving behavior? In other words, are we initiative buying away from yesterday's relatively balanced profile? Or is this responsive in that we open, we push up, and then we become responsive? And if we are responsive, what is my target here? If we're responsive, my targets are going to be the prior high, just name them one by one, prior high, then we're looking for the full session VWAP, but the key target becomes settlement, and then you have your gap to settle trade. If it's initiative, in other words, we start to open and we have a very weak pushback, and then we squeeze higher, leaving a gap below, then we don't get short. In that environment, we're not going to get short against the fact that it's a gap and go situation. So it is a gap and go, gap rules apply today, and it's key to watch. It's key to watch what it does at the open. So being there and watching the open. I'm not telling you to trade the open. Being there and watching the open is going to be important today. Same thing in the NQ. The NQ is coming in here, and the NQ very clearly squeezing lower and lower and lower. I believe the NQ is very weak relative to the S&P and others. And then here we've spiked up, and we're holding up here. We're holding up here, and we are above yesterday's range. Same exact thing. We open. The question becomes for us is, for us, how do we respond to yesterday's range? So let's look at the active chart that gives us where we are today. Here's the NQ. Let's look at yesterday. There's yesterday there. Okay, this is yesterday's high, the IB high at 10,927. And then what we're looking for here today is, does it open and respond back? If it does respond back and gets into yesterday's range, completely balanced range, then we're looking for the point of control of yesterday in the NQ. So we're down here at 10,862 or so, 10,860. Then we have some confluence here with the mid. So I'm expecting it to come here, pause, attempt to rally, and then eventually move to settlement. And that'll be our gap to settle trade. But if it opens and it hesitates to pull back. We see it selling, boom, boom, boom. They're hitting the bid, they're hitting the bid, they're hitting the bid. But then the bid becomes solid like concrete, and you're trying to hammer on it with a small hammer. uh, then we're looking for a pop. It's not necessary to take the trade on the pop because it could pop and continue, but now you're looking for shallow pullbacks or weak pullbacks to get long. And in that situation, now you're starting to target, the key target becomes at 11,050 way up here. That becomes the key target for the day, and that's basically giving you about 100 points, 130 points of range in the NASDAQ. That's the setup there. What are some of the clues we've got for this? Here's the S&P delta. Okay, this is the volume delta for the S&P. Pretty quiet. We expect it to be quiet on release. European markets open, and it's got some sellers, small lot sellers, and it looks like large lots sold early and have been holding steady. Large lots are buying, very large lots are buying, dragging the cumulative delta up with the small delta holding steady and sideways. This is really trying to lift here, but man, there's quite a bit of overhead in my opinion. There's quite a bit of overhead to overcome in the S&P. I am expecting this thing to try to push up. Why is this saying, hang on one second. Settlement. Something's goofy here. Yeah, there's something goofy here. I'm not seeing, sorry about this. The delta is very weak currently. So let's move over here. Did I lose something? Yeah, looks like I'm might have. Where's the S&P now? The S&P is at 6150. 6150. Yeah, looks like I've lost my connection here. Man, this PC is just so unstable. I apologize. I'm gonna throw you off. Yeah, it looks like I've lost connection. It did look odd to me. In either case, I'm looking at IRT here on IQ Feed, and it's basically the same thing, right? So if I pull this over and show you this, let's kind of kill some of this and show you this. You could see that it's holding steady to the upside, but the delta is still relatively weak. To me, this looks like it's very, very likely to respond downwards. There's quite a bit to go through. There's quite a bit to go through on the upside. In my opinion, it'll be much easier to facilitate selling than buying on the open this morning. Okay, so I'll leave you with that. I'm going back to my regular PC that actually is a little bit slower, but a lot more stable. So I'm opting for stability over performance because this thing is just garbage. All right, I'll leave you with that. Hopefully you've picked something up today and just trade carefully today. We're going into the weekend. Wait for the market to set up. It is not wise to jump in on the open, in my opinion. You might get lucky, but it's not wise to jump in right on the open today, given the location of where we're opening and given the potential for really, really good information on the open just as we come in. Good luck, and sorry about the issues here. I'll catch you on Monday. Hopefully I'll have it resolved by then. Take care.